Yeah, I don't think so. Yeah. All right, close that. All right, we're good. We're live. I just got to put the stupid Zoom logo on the bottom right. Whatever. All right. We are live. What was I going to say? Okay, so this week we've got some economic events we got to pay mind to. Just make sure they're out there. It's actually nothing that major, not too bad. But we've got on Tuesday, tomorrow morning, these are all in the morning, unless stated otherwise. Retail sales, and then Fed speeches just all day long. So the market's going to be having little reactions here and there. Did you hear what that Fed speaker said? Did you hear what that Fed speaker said? Tomorrow's going to be a little bit of pandemonium as far as spikes back and forth. And you're going to go, God damn, which way does the market want to go, or what does it want to pick? Fact remains, um, those movements, as long as they're even inside of the prior day's range, they're completely plausible and don't have to make sense. But you don't need to make sense. What's going on? Uh, Nothing. Just panic or FOMO ensuing, and then it's going to be just based on, yes, it'll be based on something. The Fed, didn't you hear what the Fed just said? So that's what tomorrow will be like freaking all day, back and forth and back and forth, and that's just from each chair is speaking their mind separately. So the market's just going to be just whiplash and pulling you back and forth and back and forth, and it's just going to be meaningless though, because the only real strong, meaningful information is the report that comes out, and when the JPOW speaks and their decisions. That's the most important thing. But it will lend some insight. But you'd have to be a money managing fund or something like that to be able to be following every. What do they say? To be waiting on bated breath of everything that comes out of each of the speakers' mouths. You don't need to do that as a personal trader. Just be aware that tomorrow will be just random, chaotic kind of pandemonium within a range. Really not that bad. Good morning, Mark and Michael. So, again, happy Father's Day to you guys. Father's Day weekend. And then listen, so that's Tuesday, that's tomorrow. So it starts with retail sales numbers in the morning and then Fed speeches all day long. And that's what it will feel like, just whiplash. Wednesday is not really anything that big deal. Thursday, we have some housing numbers that will come out and jobless claims. And they'll come out around the same time. And I don't think housing numbers will move the market much, but it'll probably, I'm guesstimating that the housing numbers will point to a little bit of deflation. We've, we're finally seeing metrics positively show deflation. So probably housing numbers will show that. And then jobless claims. What are the jobless claims like? That'll be released as well. That's Thursday. So that'll move the market slightly. Whatever sentiment occurs will stick. And then Friday, PMI flash numbers, PMI. And so that might move the market a little bit as well. But it's a pretty lightweight week as far as economic numbers are concerned. So pay more attention to any big companies reporting earnings, because however they report and guide could be indicative of what to expect over the next few weeks, and so that could move the market in general. PE numbers, on big companies. Outside of that, I really think that this is going to be basically a trading week. We're just going to be inside of this from here, which was last week, to there, which is next week. We're just going to have trading, just trading, going back and forth. So you got to kind of know, do you want, to have a bullish or a bearish bias on whatever particular stock it is that you're looking at, and just buying the dips or shorting the pops, however you want to do it. Just be aware that it's all in between trading action this week, and that you shouldn't worry too much. You gotta be careful about getting pushed off your position. This is a week for trading manipulators to push you off your position. So very nice free form week for them to screw you over. But it's going to be all fairly meaningless because there just isn't the real economic data to back up anything that happens on the market this week. So maybe we're at the very top here of all-time highs opening this morning in about 13 minutes. Maybe it continues to run green for today and tomorrow, and then psychs out, pulls back. However it goes, don't get too committed to it. I'm trying to tell you now what to expect for the whole week. Whatever happens is bullshit. This is a non sequitur week. Next week will be more important. I haven't even looked at the trading data, the economic data, but it has to be more important than this week. This week's very lightweight. So I'm trying to explain to you, whatever happens this week, you have to understand that it's BS. So don't, put your heart into any move. If something moves, it will come back on you, or fake out, or get washed away in some manner soon enough. This is a nice wide open week for anything can happen. Anything can happen. All right, so that's what you can expect a little bit this week. Now today, let's focus on today. We are opening on the Qs, at least at the tippy top of the market, in pre-market of all-time highs. On the S&P 500, Friday was a bit of a pullback day for the third day in a row. And those are stocks that include value stocks and industrials and just everything across the board. It's not isolated to growth stocks. If you go over to SPY value, you'd see much different picture. The value stocks are not doing so well. And that's why SPY is down versus QQQ over the last 3 days, because QQQ is more like SPY G, which is the growth stocks of SPY. And look, there's a graph that looks a lot like QQQ, because those are the growth stocks that are in the S&P 500. So that's how you can dissect it. And then the S&P 500 together is a combination of SPY V and SPY G. And that's why SPY S&P 500 is down the last couple of days, because like I just illustrated, SPY V is way down. Like, it didn't even make a higher high recently. It's been down off of a high that it wasn't a higher high for months. Back to QQQ. Now, another interesting picture is if you were to realize that the QQQ is running, at least since right here, mostly predominantly on big mega caps. Those are the only things actually pushing up the market, because when you can see that when you go to QQQE, the equal weighted QQQ, you can see the market did not make a new all-time high here, nor did it make a new all-time high here. It's actually equally rated. It's been since March since we hit a high. And even that was a fake out double top. So really, we haven't made a new high of any note since March 1st. So March 1st. It's been since March 1st since the market actually has altogether done well. It's not done well. It's going sideways. So if we look at QQQ though, you can see a different story. It's being pushed up and pushed up by just a handful, 5 companies, 5 of the biggest companies. If we look at NVIDIA, you can see that one's just flying, and that one's definitely up there in the mix. And you got Microsoft, which has been making some new highs. And then we looked at the other day, Costco is one of them as well. Costco, not an AI technology company or anything, but it is huge, and it is a part of the QQQ composite index, and it is pushing things way up high. And then I believe it was Broadcom. So Broadcom's doing super well, and the last couple days is a good example of that. Carl says earnings this week are KB Home, Accenture, and Kroger. All right, so yeah, nothing too major. But KBH for KB Home, yeah, it's been doing well. Um, I got in way back here when it was like super low at like in the 20s, and now it's in the 75s or so. Accenture, ACN, okay. Yeah, that's just doing terrible. And then Kroger, KR, I believe, yes. Groceries. Um, Sideways. It's been sideways for a year now, so can't really expect much from it either. So yeah, this week's earnings are not that crazy either. Let's take a look at Bitcoin. So I think Bitcoin looks great. This pattern here is actually is excellent. So that it's not going up right now doesn't mean it's not great. Have this top line resistance level at about 73,000, which could be 72,000, and it just overshot it once. That whole area right up there. And then it went up there, pulled back, went lower, came back up, and we're getting probably into a kind of reverse head and shoulders type of pattern. It could be that this is the low it's going to go, then it does something like this. Or it does come back down to retest the previous shoulder level here at 60,000, 61,000, and then comes back up and then puts in a tighter right side like this, and then doesn't break out until, I mean, it could keep doing this tightening until the election in November. It's probably what it's going to do, which is right around here. November 5, election results. So election years can have that effect on things, and Bitcoin is pretty much saying it right out loud. Hey, we're not ready to go to new highs yet. We're waiting on something. What? Probably the election. All right, 7 minutes until the market opens. We really don't have any particular picks for intraday day trading, but we do have Avgo is up 3.5% and continues to push and run because its stock split is coming up on July 15. And so there could be some FOMO going on there on Avgo, a run up occurring. I don't know how high it's going to go. But see, one of the things that happens is the current price on Avgo is 1790, 1800, whatever price, 1700. If you wanted to buy 100 shares of it so you could wheel it, so you could have income based on wheeling, which is an option strategy in order to bring in extra income on stocks that you own, well, you'd have to have $180,000 in just that name. Can't do it. But when they bring it back down, what's the split going to be? Let's see. 10 to 1. You'll only need 18,000. So that changes the amount of people who can be wheeling that stock considerably, and so it will allow a lot more people to get into it. So it will have increased liquidity, and it will have more people in it at a lower price. This is one of the things that limits stocks when they get too high price like that. Nvidia, for instance, now is just $132 a share, roughly. And so it only takes $13,000 to open up 100 shares and then start wheeling against your stock. In a way, wheeling is like trading against your margin, against your own. You create your bank, so you deposit 100 shares of something, and then you wheel against it, which is you sell other people the option of taking away your shares at a higher price. And you're hoping it doesn't go there. But if it does, you're okay with giving it to them at that price, even if it went higher. So you do limit your potential gains if something goes higher like that. But then once you have given them away, then you sell cash secured put, and that's called the wheel. And a cash secured put says, hey, I'm interested in buying, selling the option here to buy shares at a lower price should it happen. And again, you're kind of hoping it doesn't happen, so you just earn the premium on somebody else from somebody else, and then boom, when it does happen, you get assigned your shares, and now you have your shares again, and then you do it the opposite way again. You sell the call, and you keep going round and round like that, basically trying to get premium. You have to ask yourself, what is your intention, and like, do you really want your shares to get called away? And in the meantime, you're holding your shares until they get called away, and in a round robin fashion, and you're essentially after a year or two of that, you end up getting a huge discount on your entry price, essentially. You missed the original entry on NNE? Ha, not me. Are you kidding? That's a great idea. And the conference coming, man, see this red bar here? I bought all along here. I bought all along here. I bought all along here. Every time it went lower, I bought, and then it signaled here. So I bought a little bit more. So those were my three entries right there. NNE. And yeah, now it's $10.15, about to break out to new all-time highs. I'm up 37%. So do you need to wait for a pullback? Always. Always, Carl. Tell yourself that. It's just better. I mean, that we have techniques to get in on signal days and grab a tiger by the tail. But it's better, lower risk and higher reward to get in on pullbacks. Yeah. So you're gonna have to be patient. Keep watching it. Excuse me, I gotta sneeze. All right, I'm back. Um, so that's nano nuclear energy. That's what Carl is talking about. NNE. It's a recent IPO. They make portable nuclear reactors for powering up needs for either villages, small cities, could be concert events. The applications are really wonderful, and it basically is about the size of a semi truck. It's a shipping container. You put it on the back of a semi truck, drive it up to the event or the location, power on your nuclear power generator, and you have clean. The um, byproduct is steam. You have clean nuclear uh, energy. So that's the future. And I imagine that they can get it even more portable, even smaller. And, they are the future. What a great idea for a company. What a great company. They're getting a lot of brilliant minds behind them, and brilliant idea. I mean, just knock on wood that they're legitimate. So do your own due diligence. I really haven't had time to do enough on my end, but they were recently at the nuclear conference and acquired some further talent into their company. So, I mean, signs are good. Great idea. I'm behind it, and I'm accumulating shares. I think my average is around $7. So I'm in decent shape. It might be a little bit more than that. Yeah, 730. Although I would love to have them around five. If they pull back and make lower lows, I'll add. I want to get my average down if I can. And then maybe, on big, huge pop days, I'll sell some, but not a lot. I'll keep a core position growing and growing, but then I'll have kind of an outer crust that I'll keep scraping off of. All right, market's opening now. So we really don't know which way the market's going to go. Like I was saying, it's very extended. But whatever it does, it could be a bit of BS. Just be aware of that. I gotta watch Avgo to see what it does off of the open here. All right, selling off. That's useful to me because I got to get rid of it. It's just doing too good. Hmm. Oh, okay. That's exactly what I was hoping for. All right. See if I can get that good of fill. That would be nice. All right, Avgo. Now, QQQ. Now, right after the open, we are there it is, 1 minute out of the gate from the open, and we have about a 50-50 straight across the board, green, red, showing from our growth stocks. One of the strongest off of the open right now is NXT. So let's take a look at that. A kind of wild, crazy price movement on the chart over the last year. Today, it depends on if you want it, but today it could get to 60-40 and that would trigger an entry. Yeah, but I don't love it. VIST, no, not the greatest chart. Some of these recently hot stocks that make the list, they are doing great off of the open, but that doesn't mean they're in a good spot or that they've been putting in a good pattern lately. So, but the main thing is that we don't screen them out to the point where there's a subjectively good entrance day or entrance moment going on, and we missed it because our screening criteria is too hard. You don't want to be scrubbing your data too strongly so that you're only down to 1 or 0 picks every day. So this is why I have, over 100 picks sitting here and tons of picks all over here. Lots of picks all over. Let's see here. So anyway, this one, Oscar actually looks very interesting. So, moves up. It doesn't make a lot of upward price movement often, but when it does, okay, so let's see. Yeah, every time it makes a bit of price progress or breakout, every breakout is followed by digestion. Every single breakout. We had one right here, boom, where it had two in a row, had two pushes, and they were actually 3 days apart in a row. It's not a lot, not a lot to want to achieve or get out of, it. But it stays resilient. So that's important. Its digestion is nice and supportive and healthy looking and slow and smooth and strong. So it is good for a put credit spread, but I just wouldn't love it for shares. You'd be crossing your fingers a lot, with the shares entry. But however, if you were wanting to get into this via shares, around here is a good idea. It's around the 50 moving average. It's pulled back a lot. It's pulled back a lot here. It's pulled back a lot previously. It's starting to turn around. It's hiccuped off of this, bottom area here. So it's getting interesting at these prices. But probably, at around 18 is a better price. Anyway, let's see the option liquidity here. Maybe I could pick up a PCS on that. OSCR, it might not have very liquid options, so I might not be able to. 43 options have bought and sold today, traded volume. So what we'd be looking at if we even wanted it was the 16 strike, which has a 25% spread. Oh, actually, it just tightened up a little bit. Okay, the open interest on that is 138. So I would say that it's not dead. It's workable, but it's at the lowest end of workability. So I'm just gonna check the pricing that I could potentially get. Let's see. If I were to get a $1 spread, I could get 30 dollars credit. So 30 over 70, that's almost a 50% ROC. So if I can get that, it'll be worth it. Unfortunately, I do have to pick a $1 spread. For me, though, you can do that. That'd be the 16.15. I'm going to get the 16.14 if I can. So that'll be 50 for 150 or 33% ROC. And my allocation's got to be fairly big. I'm going in there now for around 15 contracts, and let's see if I can get filled. I might get filled. It's easy to get in. It's hard to get out. It just reminds me of when I used to live in Roatan, the island. Uh, they used to have you find these on all the beaches and all the different tourist locations. You have this guy that would walk back and forth trying to sell parasailing. And then one day he had a new tactic he was using. He was walking by and it said $1, parasailing $1. And he'd walk around and he'd say, parasailing, who wants to do parasailing? $1 to go up, $1 to go up. He'd be walking by $1 to go up. And it hooked people and people were really interested. And I said, oh yeah, $1 to go up, but 49 to come down, right? He said, you got it. So that's exactly it. That's the way it is with these illiquid stocks is cheap to get in. It's easy to get in, hard to get out. So see, I did not get filled. So now I'm having to chase to about a 31% or 30% ROC, and I don't think I'm going to get filled there either. Oh, there it goes. Okay, I did get filled for 47 out of 153, which is 30.7% ROC. And now let's diagram that though. I could have did that beforehand, by the way, and you should diagram your trade before you get in. What stock was that again? Oscar. So you just map it out from the current price to the expiration, draw a line, current price to expiration. So it was August 16th, I believe. Yeah. The 16 or 30 cents, so 1570, the break even. You just draw your line like that. And I have a little setting here, save, put credit spread break even. There it goes. It writes it in for me. So as long as price action can get over this line above it, but ideally if it can just stay above it the whole time, maybe it starts moving up from here. But if it can just get over that line, before earnings coming up, at that point, once it gets over the line, however long that takes, or if it's right away even, um, the gains will start flowing in. And you can take profits at that point. You don't have to wait till the expiration. We never wait to expiration on these. Never. 21 days to expiration is the maximum we hold these until. So that's 3 weeks to expiration. We don't, these are swing trades. These are not hopes. These are trades. We play them very carefully. So anyway, Oscar, that was one of the ones that's having a good morning. Top 20. It's currently number 20. BMA, Kava is also doing good. BMA, we'll check BMA though really quickly here. BMA, the volume on it day by day is a little bit sketch. So I'd stay away from that. Kava, things can't flow when the volume's not there. It's like flipping a coin and you only have 1/100th of the coin. It's like, what are you doing? Like, you can't even form a flip. It takes you a long time just to get a flip. All right, Kava's doing well, and it looks like a very good entry spot for a put credit spread. I'm going to take a look at if I already have it though. No, I don't. Okay, so this could potentially be one that I can add to my positions here. Kava. And 16th of August is 60 days away. We like to get 45, but we don't go with weeklies. And only the 19th of July is the next one. And that's 32 days, and that's too short. It's still possible. 30 to 60 is the range, but 16th of August is better. So that would look like this. Yeah, I already have some previous lines, which means either I was looking at it or I was already in it and got out at a profit. But we will be talking about August 16. Okay, we want it something around here around 75. Let's see what the options say. August 16th, the 22 delta is the 80. And the 22 delta is the 80, 75. The spread is nice and tight. So it's a very liquid stock. We get $1.20 for a $5 spread. So that's 120 divided by 380 or a 31.5% ROC. Now, see, my opinion, yes, that's great ROC. And we're getting 22% So 78% probability of success, but we could drop down to the 15. Let's look at that. That's a 16 delta at 75, 16 delta, and that's giving us 97. So 97 divided by 403 is 24% return on capital. So why not go with the 16%? That's at 84% to win. So it's a much better probability. And so that's what I'm going to do. I probably need to get 5 of those contracts. Yes, maybe even 6. And it's very liquid, so I'll probably get filled after a few seconds here. But I might need to chase for a penny or two. 85 and it's showing 82.5, so I'll just lower mine to 84. Actually, the price has changed. The price is changing radically against me. It's now 70. And when I calculated, it was at 97. So 70 would be 70 divided by 430. That's 16.3%. See, it's equalized. It's equalizing. So now it's not as attractive. And I cancel that out. So that's an example of live trading. Now I'm going to go back to that 22 delta 80 strike. And let's see what it's offering now. Now that's offering closer to 27% ROC. All right, beggars can't be choosers. I'll try and get that one at that price right now before it walks away from me. I actually got a better price. I got $1.12. Thank you, Schwab. Schwab's been doing much better price fills than TDA ever gave you. So I just got Kava, was it? Yeah, Kava, the 8075 for $1.12. So now I mark that here. 8075 for $1.12. So that's 78 $1.12, 78 88 on August 16th. 16th. Right around there. It's close enough. Put that down. Boom. So I got to stay above that line or get above that line or be above that line at some point throughout this trade in order for it to be profitable. Looking forward to it. But these are stocks that are hot off the open. You can do with them what you will, whether that's, getting a put credit spread like what I was doing or whatever you would like to do. I'm going to check in on Avgo for a second. That's one of the stocks I have. One of my positions that's a little bit at risk. It does not look great. Really need to close that out. Let's get over to Avgo. Could that be the case? Let me see. There we go. Wow, the bid asks are flying around wildly. Avgo's options. Okay, I'll just make my number a little bit more rounded and a penny. Get one of these contracts de-risked. All right, in the meantime, what else we got? We got SMMT, which has been doing really good a couple of times lately. Had that huge pop recently, Summit Therapeutics, and had a nice run up earlier later last year. Kind of been a stock that's been doing well. So SMMT, that could be something that is potentially is now pulled back after its initial spike a couple of weeks back and getting into a position to run again. BMA GGAL, GGAL. Oh, it's SMMT. GGAL, back and forth and back and forth and back and forth. No thanks. Dell. Dell is curling up to come test its gap after earnings guidance disappointment. I think it's kind of neither here nor there though. Dell MMYT, but it is having a good day. Dell, in case you're interested. Make my trip limited.com or make my trip online travel company. Make my trip. I guess it sounds like a what do they call them again? Travel. Why can't I think of that word? What are those called? They've been around for 50 to 100 years now. Travel agency? Is that the word I'm looking for? Travel agency? Yeah. Yeah. Thank you, thank you, thank you. Anyway, they have a very nice chart. I love their chart. It's gorgeous, absolutely gorgeous. Yeah, I love this chart. However, it did have this really strong sell-off recently, but once these sell-offs bottom, what it looks like is it picks up steam again, and it could be doing that now, or this could be an intermediary day. It's hard to say, but there is a bit of a lower high situation. I mean, a higher low bounce off of the 50 that just has happened recently. And this could be a good number to get in at. Let me take a look at the options liquidity, but this could also be a good trade spot to get in. MMYT. The option liquidity is really low, 44. That didn't stop me on the other one though. Let's take a look here. The 20 delta doesn't exist. It's the 25, then it skips to 16. I don't usually like those giant skips like that. I like it to be, very granular, or 25, 22, 20 or 19, 16, but this one's going 25, 16. So I probably wouldn't get it. And the spread is about 18%, doing the quick rough math in my head. 18% is a little high. So altogether, we put that together, we could get a 25 delta spread, the 70-65. I have to look and see if I even like that. Actually, I do. Definitely below the 50 and down in another supportive area. I like that. For $1.27 divided by 33. So that's 38% return on credit, 38% return on capital for a 25 delta. So it's definitely positive EV. The question is, what about, could I get the 16 delta for 25? Uh, the bid ask spreads on these are really wide, but no, it doesn't look like it. 72 divided by 428, 16.8%. So it's a good deal on the 25 delta, and I'll try and pick up some on that. It's very illiquid though, guys. I don't recommend getting into illiquid stocks too much. However, I have my methods and ways of dealing with it, where I can pick up borderline cases. This is borderline. If you hear me later say, "Oh yeah, see, I shouldn't have gotten into this," this is why. All right, here he goes. Let's see if I get a fill on this. I'm a very illiquid stock. They're gonna go, "Oh fuck, somebody wants us." Oh hell, here you go. And then dollar to go up, but 99 to come down. And already I think it's equalizing. It's not going to give me my price. Well, no, actually, it's sitting right where I asked. So we'll see. Let's see, it equalized 2 cents. Well, I know I'm going to be getting a decent price. Let's see if we can get a fill here at a decent price. If not, then I'll move away from it. It's not filling, and rather than fill, it's probably coming up with a better adjustment. Mark is 125 right now. 125 is what my order is, and the mark is 125, but it's probably going to drop to 120 or 122.5 rather than fill. All it takes though is for price to pull back a little bit on the stock, and then maybe it'll be there. All right, let's see. I got into Adobe long, and that's one that I need to look at because it is now pulling back on me. It looks like I didn't put draw my position on there, and I need to. So the question is, when did I get it? It was probably on opening day there, ER. When did I get it? And at what time? Early in the morning. Okay, so that was, I jumped the gun too early because by the end of the day it was negative. Now I'm down 29% 29% max profit. See if that stabilizes. So early in the morning, the open would be here, and it was the August 16. So I do have a lot of time, but you can see why I'm underwater just in a moment here. 490, yeah, to 480, for $2. So we're talking about the 480, 490, 488, right there. So as you can see, I mean, depending on how much experience you've experienced me drawing these lines and seeing stocks move against these put credit spread lines, as you can see, this is very normal. You get in, and if your timing wasn't right, it moves against you, but then it stabilizes and or reverses and starts to put in a zag. And then the zag can come up and over sort of mid trade, midstream. This is like a multi-month trade here. How many days is the 16th? This is a 63-day potentially trade, but we take it off 21 days before that. So about 40 days, 40-day trade. So in the next 40 days, if it stabilizes and then zags up and then goes into my profit zone, because of all the built up time that has decayed, when it zooms into my profit zone, probably will experience accelerated profits, and I'll be up as much as I'm down today. I'll be up in a single day. Could be even phenomenally more than that, and then the trade success rate will come uh, true as it was foreseen. What was I going to say here? Is that um, moving down about? Maybe I was just going to draw it for you. I don't know. I was just going to show you something. So if it does something like this and then starts to stabilize and then has just like one good day like that, boom, it's inside the profit zone. And then let's say it even comes back after that, comes down, and then forms sort of this another push off the bottom. There's another day in the profit zone, and then takes one more day after that. So you always have, oh, probably what I was going to say is this is just something that happens when the timing of your trade was off. Oh, and also it's so much more forgiving. Oh, I know what I was going to say. It's so much more forgiving than shares because look at where prices I'm talking about being in a couple of weeks and that I would be profitable. It would be at, even like 512. But where was my entry? 530. So price gets down to a lower price and I'm up. That's just one of the crazy, amazing things about put credit spreads and their beneficial break-even line. Let's see. I'll take a look at like one or two more stocks here that are leading, and then we'll move back into the group. Madrigal Therapeutics is often coming on our radar. Let's see. Yeah, it's mostly sideways and it's not making new highs. This is like, it looks like Bitcoin. Do you see what I mean? Like it has that left shoulder it's formed and then a deeper trough for the head, inverted head and shoulder. And now it's forming a right shoulder. It's got earnings coming up. It's had mini earnings between all of these, but this has been a long time. 2023, it hasn't made a new high since 2023. So roughly we want to stay away from that. It doesn't matter how good any intermediary zag goes. We need things that are moving up. Gap. Gap's got a lot of gaps, ironically. Gigal Cart, that's Instacart. Instacart not doing great. I did have a bearish short on it a little while ago, and that worked out wildly in my favor. Um, it's not doing good. Some things are even shorts. Beely, that's a Chinese company. Um, so you don't really want to get too much into that. A, because it's Chinese, and not because of any kind of racial reason. My very best friend is Chinese. I love China. I love the Chinese, but because of the communism. It's because of the communism. Okay, because they fuck with their numbers. They can do whatever they like with their they can peg their currency at whatever price they wish, and they can mess with their own the whole system. And then second to that is that there's and consequently also a lot of their stocks numbers are all manipulated, and it's difficult to trust. Difficult to trust. And then number three is they trade in their market time. So this is why you see gaps all over Chinese stocks on the US exchanges. There's gaps all over the place because they don't move much on our exchange. So we could guess the direction on our exchange and move like this. And then the next day, it actually should have been pulling back based on what was literally going on in China, and then China trades it back, and now it's gapped down against you, and you just had a nice green day. In other words, the primary move of Chinese stocks exists on the Chinese stock exchanges, and we are an intermediary. So it's like our markets open when they're sleeping roughly. And if you just think of it that way logically, so we don't want to get into Chinese stocks. Those are the reasons why. Cart, GPS, Geek Fix, Stitch Fix, Reddit. Yeah, I'm in Reddit, I think, or I was in Reddit and I took my profits. Let's see, Reddit. Do I still have it? I still have it. I'm at 49% um max profit, but I've already taken profits on that recent push. So somewhere I'll pick up some more, and then I'll have closed out this trade at a profit. hmm Yeah, very interesting. Reddit, and then also NNE, another recent IPO I was talking about earlier. Nano nuclear energy. I mean, the price movements on this one are amazing. Like it went from $3.80 to $10.70 across a couple of days. And the cool thing is, I actually like what they do. That's different. It's not just a pump and dump. Yeah. I mean, maybe it is. I gotta watch out. Everybody do your due diligence, but I'll be picking up shares at lower prices. I feel good about it. It seems like a very good forward looking technology company, but it could be based in somebody's backyard in Iowa. You know what I mean? So I don't know. I haven't done enough due diligence. It looks good on the surface, sounds good in the news, it's looking good on the charts. I'm in it. It's been good to me so far. Uh, and that's all I have to say about it so far. I haven't, talked to the CEO. That doesn't make a damn difference, by the way, because the CEO always says something good about the company. If you ever get a chance to talk to the CEOs, they are always saying something good about their shitty pump and dump bullshit, pyramid scheme, fucking penny stock, shit stock. They always say something good about it. Don't worry about that, until they're in jail, after the fourth or fifth one. But this one just seems a little bit better and maybe harder to fake. And great idea, super great idea. I mean, I just can't imagine. I can imagine only like selling one contract, or however they do it, sell a product or sell one contract if it's a service, or if people buy from them and then they service it. However it goes, is just going to add great, first revenues for them, and it'll go move from a proof of concept that they've potentially, I think, tested, which it looks like they show that they've tested it and they have use cases tested, but I don't know if that's legit or not. Do your due diligence. But it'll go from concept to actually a working um, proof of concept. Should they actually have a first sale? And I think a first sale is just the beginning. So I'm in it for the first sale whenever that happens, and when they report their next ER, it doesn't really show here when that will be, but when they do, uh, I'm going to be very curious. I'm going to be very curious and looking to see what they say and what happens, and if they have any prospects coming up, or if they closed any deals. That'd be great. All right, you guys. That's it for the morning stream. I mean, we could talk forever, but I gotta take my first break, and I'll see you back in the group. Let's keep each other posted of opportunities. And you have a good morning, everybody. Hope you had a good Father's Day weekend again. Stay safe, trade smarter, trade safer, and see you back in the group. You bet. You're very welcome, everybody.